Today we're going to jump right into our first video talking about bank statement loans, which is our most popular and our most common loan program for self-employed individuals. Now, there's a ton of benefits to this program. However, the question we get asked the most is this one right here. I got denied at my last lender because I had to provide my tax returns. Does this program take tax returns? Because if I give them to you, it's not going to work. This is a two-part answer. No, I don't need your tax returns. You have to file your tax returns? Yes, you do. You can't have not filed tax returns for the last 5-6 years. Believe it or not, I've actually had this come up where people say, I need a loan program where I don't have to provide any tax returns because I haven't filed them. It's not the case with a bank statement loan. You do have to file them. However, I don't need them. We don't verify them. We don't see them. And I'm not advocating for not filing your taxes. But I don't need your tax returns on this product. So is how a bank statement loan works is this. Typically, you can get exceptions, but typically you have to be self-employed for at least a 12-month period. Now, you can have just had an LLC open, but it hasn't been active. You technically are the owner of that LLC. If it's been more than 12 months, you're eligible for a bank statement loan. So once we've established that, you do have to file your tax returns. No, I don't need them. And you have to be self-employed for at least 12 months. Exceptions can be made. However, 12 months is typically what the lenders want to see. Now, there are multiple bank statement loan products out there, and they range anywhere from what's called a 3-month, 6-month, 12-month, or 24-month bank statement, and it directly coincides with how many months of bank statements you choose to provide to prove your income. As you can imagine, with the different loan programs, there's different layers to this, so let me break down the main difference. All of them will calculate income the exact same, so let's touch on that point really quick. Whatever term you select, whether it's 3, 6, 12, or 24, you provide the bank statements. All of the deposits are added up over that time frame, let's say 12 months. We add up all deposits for 12 months. We take out a 25% expense factor, and whatever that number is that's left over, we divide that by 12 for the 12-month term bank statement loan and use that as your usable income figure. Let's talk easy numbers in this scenario so you can see what that income would look like. Let's say as a hypothetical, so we can calculate income just so you can see what it looks like. Over a 12-month period, if you made $100,000, we will take a 25% expense factor out, which will take us from $100,000 less $25,000 for the 25%, leaving us with $75,000 overall. We then will divide the $75,000 by 12, which will give us $6,250. Your monthly usable income now on paper with those 12 months of bank statements, $6,250, and that's your qualifying income. We're adding up all of your income, taking out an expense factor of 25%, dividing by 12, using that number as your income. That, of course, slides and scales. If you do 3 months, 6 month, 12 month, or 24, we take the proper allocation. So 24 months, add up 24 months of deposits, 25% expense factor, divide by 24. So that's how income is calculated on a bank statement loan for 1099 employees and self-employed individuals. Now that we've tackled how we calculate income, let's just talk about credit really briefly. To do a bank statement loan, typically, and this can change at any time with lenders based on their portfolio and their risk that they're willing to accept, but typically is what we see, you need to have at least a 640 middle score. So you have your 3 bureaus. Let's say you have a 641, a 640, and a 639. We take the middle score. So you would just barely be hitting the 640 requirement. So of your 3 bureaus, your middle score needs to be at least above a 640 in order to qualify for a bank statement loan. But like I mentioned, that is subject to change and can change at any time. It could go higher, it could go lower. Bank statement loans are available for primary, secondary, and investment properties. And also, you are able to put as little as 10% down in these scenarios for purchases. One of the questions that always comes up is, how do the interest rates compare with a conventional loan? Like, what if I did a conventional loan and what if I did a bank statement loan? The short answer is they directly coincide with conventional loans, but they're not a one-to-one trade. So if a conventional loan is X amount, you're typically going to see your bank statement loan is going to be sometimes a quarter, sometimes a half a point, because it's how the lenders allocate these is there's different pricing buckets and risk scales that they're willing to accept. But as what we most commonly see is conventional will be, let's say 7%. A bank statement loan, we're seeing pretty close to 7.375. Like that's a real example for today, November 9th. That's somebody with a 740 credit score. I just priced it this morning. They were 7% conventional, but they didn't qualify at their last lender. They came to us to save the deal. We're at 7.375 with 20% down on a bank statement loan. So let's do a real quick recap if you're still with me. We've talked how we calculate income. We've talked about minimum credit score being a 640. We've talked about that you can do this on a primary, second home, investment home. You can do a purchase, you can do a refinance, you can do a cash out refinance as well. And outside of that, there's really no difference outside of any other loan. They pretty much mirror a conventional loan. They do the same appraisal. The main difference is that the income is just calculated a little bit different, and we don't get any tax returns. So this is the point I made in my intro video. We work with your income, not against it. A normal bank or credit union doesn't have these products for the most part. Some do, but they don't specialize in it. It's not what they do. Is what they do are W-2 employees with 20% down, buying a cookie cutter house because they're a cookie cutter borrower, just working over at Microsoft, 20% down, 150,000 a year, buying a track home that's a 3-bed, 2-bath. That's what they do. They don't work with self-employed business owners the way my team works with self-employed business owners. This is what we do. So this is a high-level overview of how a bank statement loan works. We're going to do an even more in-depth video as time goes on. We're going to be releasing small segments of exactly how we calculate income, for example. So if you have questions on income, you can go to just the income video. That will be a 4 to 6 minute quick. This is how we calculate it. Here's a real life example. Boom, boom, boom. And there it is for you. But this right here is a high-level overview of how it works. If you have any specific questions, all of my contact information is in the description. Please don't hesitate to reach out. You can text, call, email, weekends. I tell everyone I'm available from 7 a.m. to 7 p.m. 7 days a week. Outside of that, I have a wife and 3 kids, and I do spend some time with them in the evening. Please don't hesitate to reach out. Happy to help in any way I can. And as always, just remember, we work with your income, not against it, over at Your Next Lender. And it's one of the reasons we're the #1 lending team in the country for self-employed individuals. Don't forget to like the video, subscribe, and leave a comment if you have any specific questions, or reach out directly.